All right, it's me, Kaylee. Let's try this again. So today, everybody, we're going to be covering a really exciting offering that we have, and this is called Vernafund 20. So I'm going to take these off and go over this. So our fund is something that I'm really excited to share with you because I get to share with you a little bit about how we make our investors money, one, and then two, a little bit about our company. So I'll cover that on the second half after I go over this webinar. I'm going to see if I can share my screen. I'll wait for some people to get on the webinar. And I guess when I share that portion later, then I'll make sure to share it. Let's see. There we go, that's what I wanted. We're gonna put this on YouTube, y'all. My first time. Obviously you can tell it's my first time. No, we're going live. Looks like it is now streaming on Facebook Live. Cool, 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 cool. It's the first time I've been able to do this. So I get to share this live with everybody because, now I get to share my screen, because we have a 506c offering. So we can give our offering that we're about to go over to accredited investors right now. We do have a wait list that once you are sending us an email, adding yourself to the wait list for everybody else later on, we have a crowdfunding offering. So I will cover that in a minute. But basically, this is exciting for me because I get to, I believe I'm going live on Facebook right now. I should be anyway. So let's go ahead and get started. So welcome everybody. This is Kaylee McMahon with the Apartment Queen. Like I said, at 5 o'clock, we're going to redo our webinar because unfortunately, when I was at an auto shop having this this week, we didn't have our video S cable connected. So we had a little bit of difficulty when it came to getting everybody the visuals that you're going to have right here when I screen share. I guess it went to my slide deck and then basically showed you the first slide the entire time. I also have a little bit more of expanded Q&A. I've gotten a few questions from investors that I figured everybody would benefit from. So I'm going to go ahead and screen share and see if I can also go to my Facebook status here on the side so I can keep it for comments in case there are comments from anyone that's watching. Cool. It's the first time I've been able to do this. Okay, I've got that working. So hopefully I'll be able to see comments at the same time. Fingers crossed. But if not, you know what I'll do is, like I said, a Q&A at the end. Anyone that's on the actual webinar, there's actually a Q&A button at the bottom. You can add any questions you have. When I finish the webinar, I'll be able to go down there and check out questions, or in the chat. I'll look at both places whenever we're finished. But for now, we're just going to go ahead and screen share and get started with the presentation. All right, we're going to do basic, desktop, share. This is pretty cool. I'm excited to be live on Facebook. All right, so here's our presentation, and let's go ahead and start. On the right slide. All right, welcome everybody. Today we are going over Vernafund 20, which is a female-focused multifamily value-add fund by Apartment Queen Investments. So what we're going to be covering today, a little bit of our agenda is we're going to be going over the executive summary in brief, a little bit about us, the problem we see, the solution, the target criteria, the target demographics of our properties and what we're going after, our small summary of our history and track record, investment opportunity, target return, fund goals, next steps, and of course our lovely disclaimer. So again, this is going over our executive summary, which we will cover here in a second. We'll go over introduction, target, history, community infrastructure, and then disclaimer. So very brief, a little bit about us. Again, after this presentation, I'll go into a little bit more about us as a team. Apartment Queen Investments, we are an experienced operator owner team that has over 64 million assets under management. We are obviously focused on the best investments for our investors. So how do we do that? We go to landlord, business, and tax-friendly states. So we primarily focus in Texas for our investments. We have some pretty big goals. We're looking to take down 200 million assets under management by 2022. We are looking to create 1 billion, when I say B, I mean billion, she-vestors by 2030. So here's the problem that we see. So there is a wage gap in every industry, and that wage gap is going to further increase between men and women in commercial real estate. Less than 30% of our industry is female. Actually, by NMHC standards, National Multi-Housing Council data, it says that 70% of the industry is white male and 30% is everybody else. So I don't have data on exactly out of that 30% what is just specifically female, but it's not 50-50 like it is in the real world. So here's the problem that we see. Women know that they need to build wealth. Few women know how, or they are taught how to do that in commercial real estate. Women make less money than men in commercial real estate. That is a fact. So here is our life cycle and our solution. So there is a different cycle that I will cover here. Unfortunately, these statistics are incorrect. So it's 1/3 of women are actually abused, and 98% of those, basically every one of those, is subject to additional abuse called financial abuse. This is insidious abuse, and it is knowledge lacking of being able to control your finances, have an idea of what's going on with your finances, and be able to plan for the future and create wealth. You can't take care of yourself if you can't have those skills or do those things or have that knowledge. So how do we find the solution to this problem? How do we supply a solution to this problem? So investors who want strong, passive, and stable income and returns create a profile on our portal. They fund members who are financially empowering women operators who are financially empower women operators who are funding, and they fund the apartment deals. So our operator teams are all women, and they are leading these deals with a strong track record. And so our investors fund those deals. The fund partners receive mailbox money and tax incentives, reducing the wage gap and increasing financial empowerment of women. That's just one of the many things that we're doing. There's so much more coming. So what's our target criteria? You want to know that? So here it is, 70-10. So we want to see that 70% of the units are classic at a minimum. That's where we find some heavy value add opportunity. We want 60 units or larger for the property. We want a neighborhood that is one class higher than the subject. We want a motivated seller. That's definitely the focus of this fund. It's going after post-COVID-19 affected assets. We focus in Phoenix and Texas, primary markets only, unless the building is 100% unrenovated, which we are finding in some secondary markets. 1970s or newer is our criteria. We're looking for 10 to 15% below market rent on every floor plan. We're looking for C+ class, 6 cap rate minimum. It's out there, believe me. 70%, like I already mentioned, of the units being classic and not upgraded. So what do we look for our target demographics, our target market demographics? We look for population growth, median household increase percentage above 30%, median house and condo growth value over 40%, median value for the years of 2000 to 2016, job growth by age, by percentage age. We want our numbers above 2% annualized job growth, and crime decrease. So each of these little visuals that I put together here go through exactly what we're looking for. For example, if the city is between 1 million, a quarter million and 1 million in population, ideally we look for 20% population growth between the year 2000 and 2017. And then that growth is less and less and less as the city is larger. So for example, 15% in cities over 1 million, 10% cities for over 2 million, et cetera. So we are looking for a certain population percentage growth. Median household growth, again, from the year 2000 to 2016, we are looking for each year beyond 2016 to add 2% growth. So basically what we're doing is, and we also underwrite that way, we want a minimum of 2% growth in the household increase median household increase, and then that also keeps up with inflation, like it mentions, after that point in time, after 2016, because that was the last census that we're using here to report on. So median house and condo value growth. So we're looking for 40% growth in median house or condo value between the year 2000 and 2016. Job growth by age, and then crime decrease. Basically, we want to look for over time that crime is declining. We want to make sure that the number is lower than 500. That's on city-data.com, and that is the overall crime ranking of the city. And we want to make sure, like I said, it's under 500 for that number. So you can always check out city-data.com, go down to the crime tracker. It's the bottom line there. We will not do deals where crime is increasing or crime is stable. That can be a deal killer. So here's a little snapshot of our track record in visuals, of course. So right now, like I mentioned, we have over 64 million assets under management as a team, and that translates to 750 plus stores and 400 plus investors served. So we have 750 doors, but we also have 111 units under contract in Corpus Christi right now for this fund. And today I put another 111 units under contract in Amarillo, Texas. 20K a door. What? So anyway, really excited about some opportunities. But here's some other deals that we have underneath our portfolio. So we've had the Flats, and this is in Phoenix. Luda May is in Fort Worth. This is Village on University. We've changed the name now in Denton, Texas. These are 2 properties in West Texas, Aspens and Century Tree. And then we have a couple more in South Dallas, Houston, Texas. And of course, we're growing. That's why we need you. So investment, fortunate for investors, this is a drawdown fund, meaning that the fund, and this was when the fund didn't have any assets in it, but sorry guys, now it has assets in it. So in the documents, it does make note of this, that it says that you are not 100% illiquid. So how we were doing that is that 10% of your subscription amount, once you subscribe, would be due immediately. And then within 7 days of our capital call, meaning we found an asset, we have identified it, we're investing in it, then we'd call the 90% of the rest of your remaining investment. However, like I mentioned, we already have those investments identified in the fund, way under contract, and have more coming. So we are not needing to do the drawdown fund anymore. It's just you invest your total subscribed amount, no big deal. So basically what you're going to do is skip phase 1, go to phase 2, and just go ahead and fund 100% of your subscription due within 7 calendar days of us getting your subscription documents. Now, I will update you right now. We have a apartment that is needing to be closed ASAP. So it's closing on the 20th of this month in July. So our wires are due by the 9th of this month, just so that there's no surprises. There doesn't need to be. And I want to make sure you know that ahead of time, if you have a self-directed IRA and you give your custodian enough time to be able to do their thing, which usually is 3 days, but I know with the holidays, it will take you to initiate that immediately. And then this is phase 3. So after we close, there is mentee reporting required. So basically there's 2 share classes, A1 and A2. A1 is what we will close with. And because of having to offer another share class and being able to still meet my objectives of bringing on mentees for each male that invests in the fund, we have to do this at closing. So basically we close the first round essentially, and then all the men, basically what we'll do is we will send you another set of documents to add her to your investor portal, and she will be able to access your portal without being able to change the ACH information or entity names, anything like that. We want to make sure that she can see the reporting, the photos, anything that happens, communication, and then also if she, like it says right here, once she's logged into that investor portal of her own and makes a sentence comment in her comment column once a quarter. We will even send out reminders, but once a quarter for her to just tell us how the mentoring is going. So that is the job of the male that invests, is to keep her updated on what's happening and exactly how the investment is going. And when she just gives us a sentence comment once every quarter for a year, then his preferred return will actually increase 25 basis points up to 7.25% preferred. So all investors get 7%. When you bring on a mentee, then you're actually able to increase your preferred return. So that's just kind of a way of me, pushing my agenda to create that 1 billion she-investors any way that we can, bring in more women to be able to learn about how all this money is made. I mean, if you don't know, then you won't do it. So it's important for us to know. So right now, the fund is open for investments from accredited investors, and the minimum is $50,000, which is 2 units. And our raised target is $5 million. Again, like I think I mentioned already, we do have a second offering, a crowdfunding offering coming soon. So you need to be on the wait list for that. If you are interested in investing, it will be open within a week. So that will be ready for y'all. but accredited investors get first priority now that we've already shouted out to our investors who have already invested with us prior. Now accredited investors get to invest, and then after that, it's everybody else. So right now, accredited investors can invest, and then next we will be launching a crowdfunding offering next week, but you need to be on the wait list for that. So if you're curious how to get on the wait list for the crowdfunding offering, all you have to do is email me, admin@theapartmentqueen.com, and I will tell you instructions on how to do that. Okay, so the fund goals. What we're looking to do is hit, I think I already put this on the Q&A later, is to hit a minimum of 15% IRR projected over our entire period of hold, which projection is 5 years of holds, and that is net of fees and expenses. And number 2 right here, the doors that we're targeting, assets under management with this fund, we can leverage up to about 20 million, but I'm finding maybe a little bit more because I've been able to get really cheap debt. So we can maybe leverage up a little bit better, but unit sizes are 25 units to 1,200 units. The price is from 500,000 to 15 million. Like I mentioned, we can go up to about 20 million in assets because this cash is being leveraged. The year target exits is 3 to 5 years. So let's just say worst case 5 years projected exit. And we're looking to give investors at least 85% return on principal. It's really 1.75x plus your cash on cash returns. So you can see right here, like I mentioned, it's 7 to 7.25% preferred return, meaning investors get paid that first. And then we have an 80-20 split of the fund, and we'll cover that in a second. So next steps, how do you do this? If you are an accredited investor, now you're no longer needing to get on the wait list. Now you can simply invest. So what I'm going to do is put in the chat, I'm going to add what the link is to go to our investor portal. You go to the investor portal, you simply create a login, fill out one form, log back in, and then you can review all the documents and subscribe. There's even a video inside the portal of exactly how to subscribe, so it's not complicated, but we're open now to accredited investors. Like I mentioned already, you're going to have to create an investor portal profile and submit documents. And then instead of doing the drawdown deposit, because we have 2 assets now identified, 222 units in total, it's just go ahead and fund the investment. So here's our disclaimer. So we will effectively deploy proceeds of this offering into assets which are designed to, 1, provide members with a distribution net cash flow. Members will be subdivided in 2 classes, Class A members at 80% and of the net cash flow allocated to their class, and we'll also have A2, but that will be at a later time after closing. And then the remaining basically will be B class members, which will get 20% of the net cash flows allocated to their cash as their class as a proportion of the amount of funds raised within the class to the total amount of funds raised for members overall. Class A shareholders will see an initial preferred return of 7% to 7.25%. Like I said, but that will happen after closing, identifying the A2 shares. Those members fill out their subscription documents on the fund's initial offering and are subject to immediate within 1 calendar day. So this is, again, reiterating the drawdown deposit scheme that we were going with before, but like I mentioned, I didn't think that we were going to find assets this fast. But I guess when you are ready to go, then the brokers find you, you know. So anyway, we have the offerings now under contract, so we can skip that part of this. Any member who is male in the fund must work with a female mentee who is named on the member subscription documents. After 1 calendar year of the mentee reporting quarterly to the investor portal, said mentor Class A shareholder will receive 7.25% preferred return. A capital call will then occur. Well, no, that actually won't happen anymore because now we're just funding the full amount. Just kidding. So this is a little bit outdated just because we've had some success having deals put into the fund. So we'll skip that 10% drawdown. The fund will endeavor to produce a targeted overall IRR in the range of 15% net of fees and expenses, and ultimately provide members with a targeted full return of capital contributions. No assurance can be given that these objectives will be attained, or that the fund's capital will not decrease, or that an investor's investment will not be lost entirely. We have to give this disclaimer. The fund strategy will be to offer and produce risk-adjusted returns by acquiring, repositioning, refinancing, managing, and disposing of the undervalued and or value-add multifamily properties. Again, definitely the undervalued value-add is a huge focus of this fund. So here's some Q&A that I've gotten. I think I covered some of this in there, but it's a lot of mumbo jumbo or a lot of information. Investors have asked me how long until the exit. So I'll just go ahead and say 5 years projected. How does the preferred return work? I mentioned before about the 7 to 7.25% preferred return. If that's not clear, please let me know. Basically, the preferred return in general, how it works is that we have expenses to pay on the property. Once those expenses are paid, the net cash flow then comes to investors after our value add period of a year at 7 to 7.25% preferred, depending on your share class, to you first. Then the remaining amount of capital that's available, then that gets split 80-20 between the B shareholders, which are the managers, and the 80% shareholders, which are the Class A members. So basically, you guys get paid first, then the remaining we split between managers and investors. So I feel like that waterfall is pretty generous. Normally on these deals, I do a 70-30 split or a 75-25 split. So I decided to bump it up to 80-20, thinking that that would be attractive. So again, Menti, what does that mean? How does that work? We kind of covered that earlier, exactly how they get access to the portal, how they are then at closing when you're a man in the fund, that they're added to your subscription documents. She reports and you get a higher preferred return, basically. What is a closed-end fund? That's a question I've gotten. Once your projected returns are paid out, you may exit the fund or choose to reinvest in the next fund. So you're not stuck in the fund. And again, this fund is a 5-year projected exit. We could definitely exit earlier because you have multiple deals that were closed on different times. We'll refinance at different times. We'll sell at different times. So you'll have multiple different capital events going on at once, and you're a shareholder in all of those different events. So you'll basically be able to the goal is to get your capital back ASAP. So that way you can exit, get into the next fund, or just exit, whatever's up to you. What is a drawdown fund? We covered that earlier. So this was when the fund had no assets identified. What we were going to do is take 10% of your subscription up front and then do a capital call for the remaining amount once we had something identified. But, as luck will have it, we found some good value add deals. So what is the split? It's an 80-20 split, meaning investors get 80% of the available proceeds after they get paid that 7 to 7.25% preferred. What are our fees? Let's be super transparent about this. I've had several phone conversations about this, and to make it clear of like what the percentage comes from, because someone thought it was something else. And anyway, had to make it very clear. So fund management. So for management, it's 2% management fee of the gross receipts. So meaning like each different receipt, so gross of each apartment, basically. In total for all of the assets in the fund. There is a 1% acquisition. Market acquisition fees are from 2% to 5%. So I figured if I decrease the acquisition fee, this would again make this attractive of the total. And this is of the total fund, not of each asset. I had to make that clear to someone else recently. I didn't realize I didn't put that language in there. And then also a 5% construction supervision fee. This is all disclosed in the PPM or private placement memorandum, which is exactly where you'll find all of the risks, rewards, bios, who's in charge, how this is working, slide deck, etc. So how do I get depreciation and bonus depreciation? Yes, we do a cost segregation study on each property that we take into the fund. They're all value add properties. And so that is the point of us going after these heavy value adds. We go ahead and bring in a cost segregation engineer. They depreciate everything from the carpet to the doorknobs to the ceiling fans. I mean, literally everything that's been used over time. And because our vintage goes back to typically 1970s, we have quite a bit to depreciate. So what that does is that gives you not just your depreciation, but also a bonus depreciation that you can take right now in year one from your investment. So not only are you getting K1 income or K1 paper losses actually the first year, but in addition to that, you're also getting depreciation, bonus depreciation, which usually, not always, I'm not a CPA, will help to decrease your taxable income. Not always, but again, and especially if you're a real estate professional, it really does help. So I would contact your CPA about this if you didn't already know. Yes. And so is the fund a large passive investor in other deals? No, we are a special purpose vehicle group in the general partnership. So we have decision-making capabilities. This was something else that I structured to make sure that, so normally when a fund gets together, normally it goes into deals as a large limited partner, and a limited partner doesn't usually have massive voting rights. They don't have the ability to decide when we sell, refinance, we do distributions, etc. So to protect our investors a little bit, I put them in a special purpose vehicle so they could be identified. And then what we get to do as a group, as me as lead, is we get to invest, not identify, invest as a general partner in these different deals that we're identifying. So we do get to be a part of the decision-making process. And that was important, I think, to a lot of members that talked to me about how I was structuring this. What is my ownership percentage of the fund? Because some people aren't used to funds. They're used to a deal-to-deal basis. It's pretty similar, and I try to, again, structure everything very similar to a deal-to-deal offering, but just this way we don't have to continue paying more and more legal fees every time we do a deal. Some of these roll to where we don't even have to pay certain broker fees. I won't get into that here, but just saves major costs, which makes our deals more profitable. So how do we figure out our ownership percentage? So for example, it is a $5 million fund. It is a closed-ended fund. So if you invested $100,000, that would be 2% owner of the fund, period. So people, once you're in, you're in. People don't keep coming in, and your valuation does change yearly as we hold, and we do an annual audit. So we have a fund CPA specifically for the fund. She uses a discounted cash flow method to go through all of our asset books every month, then report on an annual basis to a third-party auditor that we use to make sure that we have publicly produced financials, so everyone can look through all of our financials on our fund. And your share valuation will change every year. It will increase, but you'll be aware of that. So this is going in what your ownership would be. Your ownership percentage stays the same for the life of the fund, but the valuation of that increases because of all of the things that we're doing to the properties. And also, like I mentioned, we're doing heavy value add. So it's great to be first money into a fund because you're able to grow and grow and grow with us as we go over time. What are our projected returns? I think I already mentioned this, but I want to be clear. So the fund has a 9 to 13% minimum cash on cash projected return, a minimum of 15% IRR, and a 1.75x equity multiple minimum. We are looking to increase or to overperform on those, but of course you want to under promise first and then have everybody be happy on the back end. A little bit more FAQ. Page 10 of the presentation that you'll see on the slide deck, phase 3, again, it goes over quarterly mentee reporting for an additional 25 basis points return. It discusses the mentee mentor requirement. I believe that I've gone over that in pretty good depth, but basically, again, after closing, A2 shares will be, your name of your shares for men will be changed to A2. And when you have a female mentee, basically she gets her own portal access. She reports to that portal once a quarter for a year. Then your return as a preferred return goes up to 7.25%. Again, this is just a way for me to push my agenda in creating 1 billion she-vestors. The more women that are educated, the more that we're going to have people or women be able to create wealth for their families, also not just leave it up to the men. So if we imagine what we could do if the planet utilized the ability of women and men to be able to build our wealth for our families, I would think that we would have less middle class and more of an equal society. But we won't get into that here. So for the men in the fund, basically you're just picking a woman in your life to be specific. They could be a niece, they could be a wife, they could be a friend, they could be someone that you want to educate on your investments and keep them updated. So what I just said is detailed right here. But again, remember that the mentee cannot get into your profile. They can't change your ACH info. They can't change the entity info. They're there to be able to get all of the information and be educated. So here's another question. I have a self-directed IRA through Quest. I'm also in the process of setting up an IRA LLC. So checkbook LLC / 401, solo 401, from which I'd like to fund the investment. So we work with IRAs all the time, self-directed. We've taken in pensions, we've taken in trust funds. But when you're using a account through, say, Quest, Next Generation Trust, I've worked with so many different IRA custodians over time. But long story short, once you have that set up and self-directed, that's the important part, then all you have to do is get on our portal, and it can very easily show you how to fill out your investment documents just with your entity's information. And you can assign a custodian to your portal document and then send it right to the custodian, and then they can countersign. So it's really easy using our investor portal. What I'm going to do is I'm going to put in the chat the investor portal link, and then also I'm going to put in there my email if you have any specific questions. And even actually, I'll put my phone number in there too to make sure that you can just call me, Okay, so the last question, how can I invest today? All right, so anyone that's watching this right now, if they're interested in investing or interested, depending on what you qualify for, a future investment that I can get you on the wait list for, for next week, how can I invest today? All you got to do is text show me the deal to 469-990-4627. So again, that's my number. So I'm not even going to put it in the chat. Y'all have it. Put it in your phone number, Kaylee McMoney, McMahon. Show me the deal to, you're going to text that right now to 469-990-4627. And so I'm also going to add this in here for a 15-day challenge. I want you to sign up for this. So I know that some of this is on Facebook right now. So if you're not quite accredited yet, you can watch this video, obviously, but you can't invest quite yet. So some of those individuals who are interested in getting involved in multifamily real estate, but are like, okay, well, how do I do it? I have found that people have funds that are just sitting around. I had it too, you know, with an old company that I worked for, and it was basically sitting around, not self-directed, not making me any money at all. So what I'd like to do is, if you're needing some more time to wrangle up all of your funds, I'm going to challenge you to do it in 15 days. How are we going to do that? So number one, when you're into this challenge and you're ready to invest in multifamily, but you think you can't, but you have retirement accounts, I can help you do it. So basically, you're going to email challenge to admin@theapartmentqueen.com, QUEEN, to enroll. So week one, what we're going to do is we're going to look at your retirement accounts. You're going to write down the balance. You're going to write down, if you can, do an in-service rollover. That's something that means that when it's an active job, you can actually roll over your funds. Didn't know that, did you? And if you did, I'm going to teach you how to do it. Some of the easiest ones to work with are Fidelity, for example. I've got some investors that have TRS. Some have a 403B. There's many different retirement accounts that you can have. But anyway, we want to write down the balance, the in-service rollover information if it's available, and account numbers. And then what you're going to do is you're going to email that to us. And then we will go through how to pull all those out tax-free. Also in week one, we're going to write down your goals for 5-year investing career, what you see yourself accomplishing within 5 years. And then week two of the challenge, we're going to go look at your stagnant or where is your money. Just like for me, I have a bunch of friends that have gone through this as well. Some people, you know, are told when they're growing up that having no credit is great. Not no credit, but not using credit is great, and using cash is king. I think cash is king when it's available to make yourself do some quick moves on some opportunities. However, when you're not leveraging, for example, rental homes or other investments that are not leveraged, I've seen a lot of investors tell me that basically if you take your total expenses and look at what you've invested in that property, and then look at what your annualized return is, and basically figure out what your cash on cash is. When you're not leveraged, I've seen majority of my investors 3 to 4 to 5% is what their cash on cash is per year. So we can help you get to up to 20% annualized cash on cash return by investing into apartments. And you can simply do that by taking money out of these apartments or deals or houses or assets or many different things. We'll talk about this, which are not leveraged. So anyway, and there's also the ability to refinance, and that's super hot right now. So anyway, point is week two, we'll go over where's your money. And also week two, last day, what you're going to do is be able to book a 30-minute consult with me to set up your investing plan and basically execute. So that is a challenge. Again, if you want to be part of that challenge, all you got to do is email admin@theapartmentqueen challenge. And again, if you're ready to invest and you're an accredited investor, or you want to be on the wait list for the next deal, text send me the deal to 469-990-4627. And that is my presentation. Thank you all for joining. We're about 35 minutes in, so if you want to hop off, feel free. That's totally fine with me. What I'm going to do is I'm going to now show y'all a video about myself, about my why, about our company's why, and to show you a little bit about what we're doing in the world. So not only do you get great returns by working with Apartment Queen Investments, and you also get to interact with us because we're real people. We're not a humongous large organization, especially if you're local in Texas. You know, we're all over the state. Corpus Christi, Amarillo, Dallas, Fort Worth, Houston, Texas, we're all over the place. So happy to have that FaceTime with you. But in addition to making great returns and being able to have a personal relationship with us, you also get to invest in the future of women, be able to increase wealth for women, which is a key component to be able to have financial strength and financial empowerment for women. So I'm going to show you a little bit about us. This is a 3-minute long video. This is like my life's work down to 3 minutes. And then I'll go ahead and go into a Q&A. Let's go here. Blow this up. Oh, hold on. I got to stop sharing actually and share my Got to change the audio. Now I can share again with the audio. All these tricks you learn. I really hope everyone can see this and hear this. It's worked before. Let's do it. Hi, everybody. I'm Kaylee McMahon, founder of the Apartment Queen, the #1 female-focused multifamily investment firm. We are creating 1 billion she-investors by 2030. Take a minute to take this in. I know it's shocking. It shocked me as I received this message on my phone, or several messages on my phone. And the sad part that I hate to admit is that I didn't know how to help my friend get out of the situation. I'm embarrassed to admit that. I offered her a room in my home and she still didn't come and stay with me. And I didn't understand why until I did a little bit of research and understanding. So let's talk about that. Why is there a problem here? 2 shocking facts I'll share with you. 1/3 of all women are abused. 98% of domestic violence victims are also experiencing financial abuse, which is a longer lasting damage. And financial abuse is the result from knowledge being withheld. Abuse equals power, equals financial power over women. What are we doing about it? So we are empowering women by giving them access to life-changing passive income from apartment investments. This is reducing poverty. We're also empowering females to be part of the sponsor team to change the image that you see here. We are also giving investment education to women through tech. And there should be no more fear of money like I experienced, and you should be able to understand, therefore be empowered. My personal solution to get out of abuse was cash flowing real estate. So I'm no longer a victim. Why apartment real estate? It's the #1 fastest way for her to build wealth and financial freedom. Women thrive with secure investments, and as you can see, the industry is huge and it's unlimited. How does our business model work? Good apartment deals are found by female sponsors. They are funded 3 ways, and she-investors get paid their money as it grows 4 different ways. How do we make money? Through acquisition, asset management, construction fees, and cash flow from equity ownership. Who do we serve? Your sisters, your aunts, your wives, any female in your life who are all queens. Imagine that somebody could invest in a crowdfunding offering that we have for as little as $700 on average. And we've also sliced our minimum in half for our fund compared to the industry average. So we're able to grow the total wealth with women right now that we have from 22 billion to 44 billion. Why would you choose us in this venture? Because we're the best fit. You want to know why? Because I personally have raised $3.5 million myself in the last 18 months. We have over $20 million raised from all of our investors as a team. You can see our experience here. This is not our first rodeo. And imagine a world where you do not have to hear that when someone's living in abuse, planning and goal setting is so foreign to your life, you just need to get through the day. I want to see more pictures like this before and after that you see here. I want abuse to no longer subject victims of abuse to poverty, financial insecurity, or persistent fear. If we could learn to teach survivors how to navigate the maze of the financial world, the rest of their lives may not seem so daunting. Now, what do we need from you? We need $5 million. What is this for? It is for our female-focused fund, 1. 2, it is for our app to educate more she-investors is what we call them. And where are we getting this money from? We're getting it from accredited individuals such as yourself, female crowdfunders, impact angels and investors, women minority-owned funds, and female-owned family offices. You do not want to miss this opportunity. So there we are. Hopefully you guys can still hear me. And that is 3 minutes of my life's work all down to one succinct, nice little presentation. I'm hoping y'all can still see my screen. I'm going to minimize that as well. And I'm looking, if you guys have any questions, I'm looking in the Q&A to see if you have any, and then also looking in the chat to see if there is any. I'm going to try to go back to my browser and see if I can pull up Facebook. I'm not sure if I'm going to be able to see any live comments. I think I'm going to have to go to my phone to do that, tell you the truth. But if anyone has any comments or has any questions, I can see, I think, your comments on Facebook. As we're live, and then I can also see your Q&A questions that you have in the webinar here, and then also in the chat, I can see those as well. So I'm going to give you like 3 minutes to just go bananas and put a bunch of questions in there. I'd love to answer them because you're not the only one that has questions. No matter how dumb they sound, they're not dumb, because I have not made this the most simple vehicle in the world, but it's going to save us legal costs, going to increase our returns, going to be able to smooth the process of investing so that we don't have to continue to do a new raise every time we find a deal. we can just keep rolling with it. And there's many other facets to this that also protect the limited partners even more, because I'll show you the structure here. We had to do so much. I want to educate you guys a little bit on the crowdfunding model that is not available yet. They'll be available next week. But if you look at here, the fund structure is our final fund structure. The crowdfunding offering is a little bit different than Reg D. So it's Reg C and Reg D. Reg C is the crowdfunding offering. The crowdfunding offering is something that I'm trying to open up the org chart. But anyway, the crowdfunding offering is something that I've never done before. We've only done Reg D offerings. So before I get into this, a Reg D offering is something that is usually available to accredited investors if you're a Reg D 506C, or it's accredited to buddies, friends and family if it's a 506B. And that's what I've always done for all of our offerings. And so how that works basically is, if you are not a bad actor, you basically apply with the SEC through your attorney, you file certain documents, and then basically whenever you are taking on funds, you file more documents to show the SEC what you actually raised and keep track of who's involved. You have the PPM, you have the operating agreement, you have certain documents that they want to be filed. However, that's it. That's kind of how that works, right? So with crowdfunding, what I had to do to be able to have that offering live is they had to actually do a financial review of all of my companies ever, my social security number. They've had to go through, I'm trying to remember all the things, the bank accounts of all of the entities that are opened or that are related to these funds, or this fund, sorry. And then also, as far as going through all of the posting that I've done, I've had to keep track of that under Rule 204, submit that all with Form C, and then in addition to that, all of our marketing materials, which are just about to be launched. And that's why crowdfunding will not be open till next week, just because it is so arduous getting that put together and making sure everything's right, because it does change a little bit with who is allowed to invest. We can take on more investors when it is a crowdfunding offering. So those will be investors that are non-accredited and non-sophisticated. They are limited, however, based on their annual income and net worth to invest under a certain amount. And those rules are also posted inside the portal. Oh, and before I forget, I'm going to stick this in the chat for all of y'all on both the Facebook and here. So here is the link to the investor portal that I keep talking about. Oops. There we go. There is the portal link, and I'll put that here on Facebook too. Bam. You guys both have that portal link, so you can go in there and you can read all these documents once you've applied and basically see what I'm describing right now. It'll even tell you like what limits. So the crowdfunding platform that will be on eventually when we get there is in a week or so is Crowdfund Main Street. It is a mission-driven platform where there's over 100,000 investors on that platform that invest in only mission-driven, not just real estate, but mission-driven businesses. So I've actually have a friend on there, I won't go too much into detail, that has this amazing vegan coconut ice cream company out of Miami, out of Los Angeles and now Miami, that is on there and has a wonderful story. But your community, especially these IRA funds, these retirement funds that we have, there's trillions of dollars that are stuck in these accounts that are not investing in their own community. So it's really important to me. That's why I stay local in Texas for now, except for, that deal in Phoenix. It was such a good deal. Is to basically let the local community look at all these properties that they can actually physically see and visit themselves and realize it's a real deal. It's a real thing. They can go in there. They can talk to the staff. They can interact with what we're doing. It's not just I'm going to pick something in Barbados and go invest in it, and then you just kind of hope it's working. So we want to be involved in our community. So that is our portal link that you're going to need to go in there right now. And I'm going to also, those of you who are accredited right now, you can invest. And then again, if you want to be on the wait list, you'll also text me at this number as well, but put wait list. So if you are, so you'll text, show me the deal. I'm going to put this in the chat for you. If you're ready to get the rest of the details or have questions right now, to 469-990-4627. That is what you're going to do. Put that in the Facebook one as well. That is if you are accredited. And then if you're not accredited, what you're going to do is text me waitlist to the same number. I'll put that on the Facebook one as well, so you guys can see all the same stuff. So type it in on Facebook, I can't highlight. Okay, so that's how you get on the investor portal. That's how you text me to get invested with us and or get on the wait list for the future crowdfunding offering. So this was a way for us to be able to get accredited individuals into this fund. And then also those individuals who are, you know, mom, grandma, any other woman that I know that wants to get into these deals but maybe doesn't have 50K today, they're available to get in next. So that is my presentation for the day. And let me actually show you real quick. I forgot we want to go over the fund structure, right? And a couple of the documents that you understand what you're going to be looking at. So if you're still on here, please check this out. So here is the fund structure. Full screen, please. Okay, so what you're seeing is we have a manager, the GP or the fiduciary, which is apartment fund manager. That is me, Kaylee McMahon, principal. So the managing member is over the fund, right? So this is the lead, if you will. And then we have two entities coming in. So like we are taking, or not like, so Vernafund D is a Reg D 506C offering that we have right now. You can see it over here. It is in a special purpose entity. So what that does is that basically cloaks all of those members into a non-liable type structure, which invests into Vernafund. Then we also have a Vernafund CF, which is from Crowdfund Main Street. Those investors go also into the same fund at different times because we go with priority first. We go with investors that have invested before, then accredited investors, and then everybody else. So those that invest into the main fund also have financing done by our deal-specific lender. So our fund then invests into these specific assets as a special purpose vehicle, as I mentioned before. So the funds will be put into those vehicles depending on how much is needed. And again, will be structured as part of the GP general partnership in a special purpose vehicle. So that way we can also have some control. And then also the goal here in these assets is to go to different markets in Texas. So we're well diversified. So that's a little bit about the fund structure. And this was prepared by MW Law. Thank you very much, Adnan. So that's a little bit about the structure because people have asked that question. Then, of course, we have the crowdfunding and the Reg D different entities. So what you'll find inside the portal right now is you'll find the portal will have Vernafund D LLC offering. So it'll be like this. So you'll go through this as a subscriber and you'll read all of the different parts of this that we put together. There should be a table of contents right here so you can see your principal terms, projects. I would encourage you to focus on the sources and uses. You don't have to only look at that. I look at every word. But that is where funds are going. That is where they can go. That is where they cannot go. That is how it works. If this happens, then that happens. It's very clear. And then detailed management of the fund is also important. Tax matters, again, tax matters partner, that's me. And I don't want to go too much into all of the details because you need to read that and do your own due diligence on our company, do our due diligence on our offering. But I just want to explain to you when you're in that portal what the really important stuff to look at is. On here, inside this offering, you will see the pitch and marketing project that we just went over, modeling and projections as well. You'll see the company operating agreement. That's a good thing to look at. And also Exhibit D will be your subscription agreement and investor suitability questionnaire. That is already baked into the portal as far as where you can sign that last Exhibit D there. That's what you will be. You'll review this first and then go through Exhibit D basically and then sign and make sure that you're filling out your suitability questionnaire too, because that actually has to be reviewed before I can say, yes, we can actually get a wire from anyone. We have to make sure that they're qualified for what we're offering. And if you want any of this stuff, this is also in the portal, the wiring instructions, the EIN, any of the certificates, certificate of formation, all that stuff. We have that for the Vernafund D, which is the Reg D offering. And then also for our CF, SPV, same thing. We have all those because it's two separate companies that go into one fund and then the fund invests into different deals as a special purpose vehicle GP. And I guess that's basically a good synopsis. So I wanted to make that as clear as possible because a lot of people, I think you need a visual to see that. But again, all of this is in the investor portal, so you can see the org chart, etc. So really looking forward to having everybody involved in our investment, having everybody help us to empower more women in multifamily real estate. Right now it's really important to me to get to a place where every woman that works in the industry, which I'm surprised they don't, understands like at an executive level, what's going on? Like, how are we running the numbers behind these deals? How are we finding the right vendors to work with? How is money made, whether you're an LP or a GP? It doesn't matter. I want everybody, at least in the same industry, to understand how it works. And right now with the imbalance of you know, I think I see with my eyes about 90-10 men to women in the industry. It's really important for us to mentor more women on what we're doing in our investments in multifamily, and then also more women that are limited partners leading their families' investments. So both partners know what's going on. I really appreciate everybody's time today. Have a happy 4th of July and a happy Friday. The last thing I will close with is that we have an asset in the fund already that we are closing in a couple of weeks. And we have asked our investors to have all of their subscription documents filled out and their wires in by the 8th, latest the 9th of this month, because we have to get to closing. So that is not a surprise, of course. And so what you got to do is go into the chat, click on the Vernafund 20 portal, login, create a login, fill out the form, log back in after you fill out the form and review the documents, and then sign your subscription. Again, if you are qualified, it will let you go all the way through signing everything. And again, if you want to be on the wait list for the next Vernafund offering, which is only for crowdfunders, not accredited people, then basically that requires you to text me 469-990-4627 waitlist. Or if you're ready to invest and you know you're qualified, go ahead and say, show me the deal to 469-990-4627. Looking forward to making more women wealthy and to creating more empowerment for women and multifamily real estate as an industry. See you guys soon.